think we're live. Awesome. Yeah, I think we'll just get started right away because this is being broadcasted to Twitter directly. Like, it's not like, your spaces where you need to wait for people to join in and all these things. I think this is also a much better version of, streams, honestly. Spaces. I think Spaces firstly has a lot of issues, bugs, and all these things.
Yeah.
And secondly, I think what we wanted to do with stacking sats was obviously, invite, big brains like yourselves, Luke, to here, chat with us, get some alpha, get your thoughts on Bitcoin, what's happening, what's not happening, all these things. But majorly to also, show the faces behind what people are building, because that's very important, at least in today's world. Like, if you see, uh, I mean, not even from a marketing perspective, but how the world is also evolving, right? It is founder driven. It is person first, people first. So it's just our small initiative to do that. And like I said, more than anything, just have fun with people we really like, in a way. So yeah, welcome everyone to Stacking Sats. Today we have, besides Mikkel, we have Luke here. Luke is the co-founder, the CEO, if I'm not wrong, and also from his Twitter profile, I think it's something to do with BD. I think it's Chief BD with a Bitcoin B that I saw. Firstly, welcome to Stacking Sats and pSTAKE, Luke.
Thank you so much for having me, guys.
Awesome. Yeah, so let's get started right away. We have a few things to discuss or chat with about Luke and Nikhil today. We're going to be talking about restaking, what SatLayer is, SatLayer's recent fundraise announcement, and also SatLayer filling the 100 BTC cap within a few hours, if not day, if I'm not wrong. And also talking about what Babylon is and how does everything fit together in a way. So, firstly, maybe we can do, like always, quick round of introductions. Luke, as the guest, do you want to start first? And what we want to know from you, obviously, is your background and what SatLayer is. But besides that, on a separate note, I mean, it might be related to SatLayer directly, but your own personal Bitcoin journey. How did you get started? Not with crypto, but with Bitcoin specifically.
Absolutely. Yeah, happy to share it. So I think for me, and I'll kind of go back maybe a little bit further too. So so for me, I'm a first generation immigrant from China to the US. Grew up in the Midwest, went to school out on the East Coast, and then had been based in LA since graduation until April of this year when I made the move to Asia, the center of kind of the Bitcoin ecosystem. Um, and for my personal journey, so pre-crypto, started out my career as a management consultant at McKinsey. Worked at a variety of like traditional startups, large and small. So smallest, I was at a Kickstarter startup where I think in many ways it helped prepare me for crypto. So I was the first employee there, ran kind of all things on the business side, everything from kind of BD and marketing all the way down to support. And instead of having users on Telegram, Discord, and Twitter every day asking when token, we just had tens of thousands of our Kickstarter backers in our Slack community asking when shipping. So I think learned a lot from that experience. Also worked at an EV startup, so kind of did two stints in hardware between the Kickstarter startup and the EV startup, and also spent some time at Airbnb doing growth and local ops. Learned a lot about two-sided marketplaces, which I think also to this day I think help with kind of my mental models and frameworks. So my journey into crypto, and in particular with Bitcoin, actually started back in 20. In some ways in '09. So I think, I was still in college at the time and kind of, viewing firsthand, the great financial, crisis of 2008. And then when the Bitcoin white paper kind of first emerged in '09, I think, just being a lot of like nerds at MIT, kind of quickly skimmed it, didn't read too much into it, thought it was just like this crazy magic internet money, right? And kind of moved on with my day and my life. And then in 2011, I kind of vividly remembered this, where Wired did like a big, kind of I think it was like on the that the issue cover of of the magazine, on like the Bitcoin white paper and who is the Satoshi Nakamoto guy, right? And so that started piquing my interest a little bit, but it's still so early that kind of definitely read that article beginning to end. But after that, kind of again went back to kind of my my normie life. And then fast forward to 2014, when Jeremy, Dan, and Christian Catalini did the airdrop to, Bitcoin airdrop to all the MIT undergrads. That really piqued my interest, especially given that I had a couple of like touch points with Bitcoin before, and unfortunately, I had like come long graduate at that point, so I was not the recipient of that airdrop, unfortunately. But started conversations with among like me and my some of the other alumni. And so I ended up buying some Bitcoin as a forcing function for myself to learn, and immediately learned about market timing because I bought 2 weeks before Mount Gox blew up. So I got the full crypto roller coaster experience right away, where I bought kind of somewhere between I think like 700 to 900, kind of like DCA'd in a little bit, and then went up to like 1400, and then promptly cratered to nothing. And luckily for me, I didn't actually lose any in Gox because I ended up choosing to support, the scrappy startup at the time, which is Coinbase. So yeah, that was kind of like the beginning of my Bitcoin journey. And then in kind of in 2016, 2017, with the rise of Ethereum and ICOs, that's what kind of really drew me personally to to kind of work full time in this space. So in 2016, I was actually helping Walmart revamp their technology strategy, and so as part of that work, I was looking at all this deep tech for them, like AIML, drones, mesh networks, and crypto blockchain. So that's when I discovered this Ethereum thing, thought the concept of smart contracts and like a world computer just made a ton of sense, and really started going down the rabbit hole. And then in 2017, the rise of ICOs, that's when I decided to go full time in the space. Kind of just investing into a lot of these ICOs, first individually, and then as part of some of the kind of like investment groups back in the day. And then in 2018, launched my first crypto fund, and then basically managed that from 1822. And then in 2022, teamed up with kind of I think a good friend of all of ours, Spencer Yang, to launch pSTAKE together with my other previous crypto fund co-founder Stephen Chen. And so with pSTAKE, we were early investors in awesome projects like Monad, and then we built this pre-accelerator program that really bridges the gap that we saw in the space between hackathons and top-tier accelerators like Alliance and Andreessen, CSX, so like Binance Labs and Commission. And so I think pretty proud of the fact that at pSTAKE, even though we've been scaling up that program and running now one cohort per quarter, we've been able to maintain a 50% success rate of these super early teams getting into one of these top programs or just raising funding directly. And then that basically kind of takes me from where I started to now being kind of co-founder and CEO of SatLayer.
Yeah, that's quite a journey you've had, Luke, and we'll be sure to dive into some of those pockets that you mentioned to get some insights out of you. I think it's safe to say that SatLayer exists today because you just had airdrop FOMO in university.
Yeah, I mean, the OG airdrops, right? Yeah, I guess, yeah. Basically, yeah, airdrop FOMO, right? From the OG airdrop.
Yeah. And how's it like living in LA? You said, because is there like an active crypto community there? Because we see, New York as kind of the hub for crypto or SF for tech in general. But curious to learn that as well from you.
Yeah, there's actually always been a decent hub. It's kind of ebbed and flowed over the years, right? So I think early on, a lot of the EOS crew was there, including like Brock Pierce, right? A lot of that group. And then I think more recently, kind of Andreessen, A60Z has really come in. They kind of set up an office in LA. Their games fund is actually based out of LA. And so I think LA's always been big, especially the last few years in kind of Web3 gaming in particular. But there's always been pockets. I think the like one of the like blanking on the name, the project where like in person like you can kind of get like an NFT from each other. What is that called? It's like on the tip of my tongue.
Describe it a little bit. Let's try.
It's like it starts with a P, and then it's like it's like when you meet in person, you get an NFT to like commemorate that. And it was like all the rage for a little bit.
Oh,
What's it
okay.
called?
Yeah, no point in trying. I think I'm not aware of this one. But
Yeah,
that's an
no worries. But yeah, um, yeah, there's actually a good number of like folks in LA, and then some people like come in and out as well. So
That's nice. That's nice. Like I personally have never been to LA, but I know the city of LA very well, mainly because of GTA. It's crazy to
love
also crazy to think we've got like Bitcoin restaking before GTA 6 now.
it. Like everything will come before GTA 6. Huh?
Yeah, absolutely. Thank you so much, dude, for that. And you mentioned a key part that I think Ethereum cycle was a great deal for you to kind of also go full time crypto. And Mikhail, you were also someone that entered the space, or that kind of got you into the space as well. So do you also want to talk about your personal journey in terms of Bitcoin as well as pSTAKE?
I think I've talked about it in previous episodes of stacking sats, but I think what is interesting is like I obviously was a degen last cycle. I wish I was as degen as I was last cycle because I had a ton of time to just go on chain and chase those airdrops. I think it was not so much about the airdrops, but rather like it was such an experimental stage of this industry in DeFi. DeFi was all about experimentation. There were so many things that were absolutely new, and you would like to understand synthetics. It took me like such a long time. I spent a couple of days reading through the docs, just trying to wrap my head around the global pool kind of logic. I was like, how does this global pool logic work? And same with compound and some of the other DeFi products. But I think today is just very boring, which is what I say is fun. I think in a way because boring businesses make money, interesting businesses make for experimentation, right? So I mean, I came into crypto at a time when Ethereum was all hype, when everybody is just excited about Ethereum and the DeFi ecosystem that was being built in Ethereum. I think Bitcoin, my journey has been rather recent. I honestly held very minimal amount of Bitcoin for the longest time up until recently because I think it's more about DeFi and the fact that today we're talking about DeFi and Bitcoin in itself is interesting, but it's more about the asset, right? Bringing Bitcoin into DeFi rather than bringing DeFi to Bitcoin in some ways. So I think that's the interesting bit and what gets me excited about Bitcoin, DeFi, and DeFi and Bitcoin, whatever you call it. Yeah,
BTCfi.
I don't like that term, man. I absolutely don't.
Embarrass
I
that term.
goldify,
Yeah,
you start
not
calling
T-Fi.
TradFi, goldify, and then you have like a T-bills fi, all those things. It's nuts. It's more specific asset wise.
Yeah, I hear you. I'm personally actually, I'm never a fan of actually GameFi, the term, because I think it just reduces Web3 gaming down to like such like a sliver of what it can
I
be.
see.
So yeah, I definitely hear you on that.
Yeah, but there's obviously a lot of chatter about DeFi, right? Today, you have folks like Arthur from Defiance, who's kind of putting DeFi Renaissance into existence through this bull posting about DeFi, because I think the market also doesn't seem to have any strong narrative, and we know how much of that matters for just a general market sense as well. So from your perspective, Luke, as well, how are you looking at this? Because you've been a founder, you've been managed the fund as well, you've managed the business also in the past. So how are you looking at the market from a DeFi perspective today?
Yeah, good question. So. I think the market structure overall has actually changed quite a bit, right? And I think that's really been a result of of big BTC, Bitcoin, and now ETFs, um, where historically, right, when there's kind of like net new money flowing into crypto, there was the standard rotation of like generally it flows into Bitcoin and then it flows into Ethereum and it just gets more degen and like goes more long tail on into like alts, right? But I think the big change this cycle is that with all the money that's flowed into ETFs, right? They like just from the ETF mandates, you literally can't rotate. So that money is at least like I think the majority of that money is stuck within the ETF themselves, right? And so it's kind of like you had all this money flowing to Bitcoin, which is I think great for all of us building on Bitcoin. right? But then it doesn't flow into ETH, it doesn't flow into alts, and so I think that's one of the drivers for like kind of alts underperforming so far. But I do think I think with DeFi in particular, yeah, I think it's kind of getting a bit of a resurgence overall, and I think in part that's due to kind of like U.S. regulatory side, right? Where even though the SEC has really been on a warpath over the last couple of years, I think they kind of keep losing the cases in court, right? So it's kind of like I feel like in some ways it's really enforcement via bullying, right? Where it's like they know they can throw their weight around, and then like until there's clarity, they feel like they have some leverage. But then as we get more and more clarity on these things, it turns out, hey, a lot of these things that like for example, like Bitcoin's not a security, right? It's like it's much more of a commodity, and then like I think Ethereum's probably trending that way as well. And kind of requisite disclaimer, not not financial advice, not a lawyer, right? Do your own research. These are only our individual views, but I think overall, yeah, I think DeFi is really coming back in a way, and I think the one of the interesting things, recent trends I've observed is I think a lot of the kind of OG DeFi blue chips are also I think going a bit on the warpath themselves, right, and kind of like pushing back against all this kind of like regulatory overhang and saying, and I think in some ways taking a bit more of like aggressive stances on things. Because like one thing that we noticed, for example, is that we were poking around kind of like on the EigenLayer side and noticed like they actually no longer block US IP addresses, which I thought was quite interesting, right? Because especially with all the flack they got initially for blocking like a third of the world, right, in terms of countries from the airdrop, and now kind of really turning around on that. So yeah, and I think it's also DeFi has matured quite a bit. It continues to withstand all these like black swans thrown against it, right? Recently there was like the kind of FUD with like Curve and like a few other protocols, right? And I think everything still works like quite smoothly on chain.
Yeah, absolutely. I think with Bitcoin specifically, also what we have is a lot of matured products from last cycle. Like Nikhil said, DeFi today doesn't look like DeFi last cycle, which is I think the boringness is more of a bullish thing for DeFi than something that's hindering it in a way. Nikhil, also maybe to look both of you, like do you see that now that we have these fundamental primitives in place, whether it's your money markets like Aave, you have your swaps, you have layers on top of it with EigenLayer, SatLayer, Babylon. Do you think that the Bitcoin capital that is sitting idle, that's the only thing that we needed to kind of have this resurgence of sorts? Is that the thing that kind of propels DeFi from here on?
I think it's very much like what I kind of obviously a lot of people started trashing Vitalik right after he tweeted it out, but he basically said he's not very bullish on DeFi and on Ethereum. Why? Because it all trickles down to what happens on chain, and what happens on chain is limited by how much capital this industry has, which is very limited in today's context, right? So I kind of agree with that take, although a lot of people would disagree with it. I think it's very hard to actually scale and have real yields. But if you take a step back, ETH itself is becoming money, and Vitalik is more of a tech personality, so he doesn't see it as much as a lot of people who obviously I'm young, but Luke here, who's also young but has seen much more than I have, would agree that ETH is becoming an asset that not many people envisioned it to be. Similarly, I think what is most important is to bring an asset into DeFi that can actually help DeFi scale to a much larger size. Now we can say, oh, let's bring real world assets on chain, but who the fuck is gonna do that, right? Like, how are we going to do that? That's a much bigger endeavor than we imagine it to be right now. I think there are enough ambitious people out there who are trying to bring real world assets on chain for 7 years now, 8 years. I think there's projects like Centrifuge who've been around for what, like since 2017, 2018 now, trying to do the same stuff. I think it's Open Eden, right? Trying to do something similar. Like too many of these players trying to bring real world assets on chain to actually bring actual yields. But even real world assets don't provide real yields, to be honest. It's all through different things, we think about yields as like, oh, from one asset to another. Real world yields are also kind of similar, and you know at the cost of sounding a little bit insensitive, like Ponzi like, to be precise. So I think the best meme is Bitcoin, and that's the best bet for DeFi in today's world, because we can aim to have real world assets on chain and bring real yields. But I think the best yield source is sitting right in front of our eyes today, and that's Bitcoin and tapped capital. And if we can tap into that and bring it into DeFi, it doesn't need to happen on the Bitcoin network or Bitcoin layer twos. They don't matter. What matters is the asset. pSTAKE, SatLayer, these are all small parts of the game. It's all about building utility for BTC, and then DeFi becomes a big thing. So I kind of stand by it. I think Bitcoin is gonna be the you know the best bet for DeFi to grow beyond what it is today.
I think that's
Yeah,
also
for
very
sure.
interesting because I think in our journey as well, like with pSTAKE, we've always we've done a lot of experimentation, right? When we built Atom liquid staking in 2021, no one was talking about liquid staking besides Lido, maybe, or even when we started building in 2019, there was just a few folks talking about liquid staking, and that's it. But essentially, today we are able to replicate all that with that experience, with that thick skin, for something like Bitcoin. I think it's a match made on the Bitcoin network, maybe possibly. Yeah. Talking about actually Bitcoin and DeFi. So one of the ways this is happening is, or the way yield is coming to Bitcoin is something called staking or restaking, right? So you mentioned that it'd be interesting to talk about Babylon here particularly. So do you want to give someone that might not know what Babylon is, or why even Bitcoin and staking, these two terms are coming in the same phrase? Do you want to maybe talk a bit about that?
Yeah, for sure. Yeah, I feel like, I think in part through our conversations with, with investors, with folks in the ecosystem, especially those I think less plugged into Bitcoin, like for example, on the, in the broader EVM ecosystem or all layer ones, right? I think a lot of folks actually aren't clear what Babylon does and does not do. And I think just the entire space as a whole oftentimes throws terms around loosely, right? Even like staking and restaking, and I think so. Yeah, very happy to kind of dive into like kind of how Babylon works, right? So really, what Babylon its core focuses on right now is Bitcoin staking, right? And I think part of the reason for them to do that, obviously, I don't want to put words in kind of like like David Fisher's mouth, right? But and kind of they'll say it their own way, but I think in some ways, like Bitcoin's been Bitcoin's been this kind of like gold standard in crypto. Really good store of value, right? The biggest, oldest, and most secure crypto asset. But I think you know, uh, in some ways it has been sitting idle, right? And for most people, kind of especially before Babylon came on the scene, right? If you have Bitcoin just sitting in your wallet, right? Maybe for like 10 billion worth, right? Of like the 1 trillion like market size, so like what 1%, um, uh, is in like WBTC previously, right? Is like wrapped on Ethereum and then used as collateral in DeFi, right? But for like the other 99%, it's all just generally sitting idle. And I think the so Babylon's big unlock is like they've kind of developed this novel mechanism to provide as native as you can get in terms of staking for Bitcoin, right? So this is using kind of this timestamping protocol that David had developed from kind of his background in telecom and like 4G, right? And they're kind of using that to have this fairly elegant way to really as trustlessly as you can stake your Bitcoin and to get some yield from it. And so then, kind of the question Vitalik would ask is like, where does the yield come from, right? So in case of Babylon, the yield, especially at maturity, will come from securing other POS chains. And so in this sense, in some ways, it is restaking in that sense, right? So other chains are actually using Bitcoin as security, right? And then kind of paying a security budget to Babylon, which then Babylon turns around and pays stakers in the form of yield. So that's kind of overall how Babylon works. And then later on they're going to be launching kind of their own Babylon chain, right? With kind of smart contract capability on top.
Right. In terms of this notion of now shared security, I think that's also been something that's kind of come as a derivative layer on top of liquid staking, which already is a derivative layer on top of staking. Obviously, in the case of Bitcoin, it's only 2 layers deep because Babylon is the one that's bringing the first layer of lockup of capital in a way by making essentially Bitcoin stakeable and adding stashing logic, which is the most essential thing for anything. With in the case of where these yields are also coming from, how do you compare that landscape on the Bitcoin side to the landscape on the Ethereum side, especially in the context of the latest developments that are happening? Eigenlayer, Symbiotic. I know Nikhil has a very not a spicy take, but a very honest take on this, which is permission restaking is possibly something that shouldn't exist. So curious to hear your thoughts here.
Actually, Mikhail, I want to hear your spicy take first. Can we do that?
Not spicy at all. I just feel I don't know. Obviously, you're building a restaking protocol. You may have a differing view, but why would anybody restake like anything? Like, why would I restake an asset that has very little liquidity, is highly volatile? I think the only restakeable assets, uh, BTC ETH, maybe like I would consider this after 2 years, Sol and stable coins. Beyond that, if you say restake anything, this has been a meme around, like, Eigenlayer, Symbiotic, everybody's talking about restake everything. I don't know, man. Like, why would you restake all those shit coins, right? Like, for example, this allows an AVS to kind of use their own token to restake it. Why not just stake it then? Why just not build your own chain, stake it? So I don't get the point behind restake everything, restake anything. That's kind of what as I say. So, not spicy. I think it's just what I feel.
Yeah, I actually very much agree with you. I think, yeah, it's kind of like in that sense, we've literally just come full circle, right? Where it's kind of like, okay, I mean, isn't that just kind of proof of stake, and you're just using your own token to secure your own chain, which is what you could do anyway. So why like go this extra route and restake it using the same thing, right? I think. I think part of it may just be that from it's kind of like from a technical perspective, you can, right? I think there may be something interesting in that, like if you do kind of like a basket of collateral instead of like a single collateral, right? And so then you're just adding your tokens to like a basket of collateral, and then you're going to use this basket of collateral to secure your own chain instead of like your own tokens. That could maybe be interesting, but I think it's kind of like you definitely hit diminishing returns at some point, right? And I think in some ways, I think we're biased because we are building kind of like the BTC centric restaking platform and solution. But I think for us, it just comes down to like going to first principles and saying, okay, so we have this restaking thing, right? That's been pioneered by Eigenlayer, using ETH as the kind of collateral asset. But why not use the biggest, oldest, most secure collateral in the space? Why not use Bitcoin instead, right? So that's kind of our approach. And I think for us, it's really to, I think, one, bring more usage and utility to Bitcoin, right? Because I think even if you talk to the most hardcore Bitcoin maxis, they'll admit that, I think with Bitcoin as it currently sits, a few happenings down the road, you kind of get into trouble because now the kind of like the fee model doesn't really work in terms of securing the network when miner fees are lower and lower, and assuming Bitcoin gets bigger and bigger, right? It's just like the things are going like the things are going opposite directions, and so at some point, like the current POW model just doesn't work in terms of securing the network without a lot more usage, right? And if like so, I think in some ways it's like if this Bitcoin Renaissance, Bitcoin season 2 doesn't take off, it's actually bad for Bitcoin in long term because then who's using it if it's just a store of value? And then I think the other is I think I think our mission is really to uplift security for all of crypto, right? Because I think you can make a pretty sound argument that using Bitcoin as your collateral is actually better than using Ethereum as collateral. right? Just the fact of just being a much bigger asset, and also proof of work over proof of stake.
Yeah, it's a very interesting thought. In terms of maybe someone that's launching or wants to launch as an AVS, right? Like or a new project. There are multiple options right now. You either just deploy on a layer one, adopt that security, or you launch as a sovereign roll up, or maybe your chain itself using either the Cosmos SDK or the OP tech stack, OP stack. And I think we're seeing a lot of applications move towards the OP stack currently, which is also a very interesting development. Do you think, because in terms of economic security, at least in this moment, or even being an AVS, like there's two things at play, right? One is the actual economic security needed, which to some extent is the dollar value in terms of restaking, because you don't have things like staking ratio for if you were a chain, right? In terms of if you were a chain, the actual economic security of your chain more than the dollar value is how hard it is to attack your chain. So that's one aspect, which is the economic security. The other aspect is purely alignment. And like you said, right, BTC seems to be a more exciting or a more an asset that you would much rather align with than Ethereum. But comparatively on the Ethereum side, you already have existing players like EigenLayer, which are backed by a lot of biggest players in the industry. You have Symbiotic, and then you have this new and upcoming projects. So do you think there's going to be a hunt for new projects by these two ecosystems to maybe launch as a BTC restake product or an application compared to an Ethereum restaked application? What's your take there?
Hmm. I think there'll be like some level of, I'm not sure if cross pollination is the right word. So I think what I mean by that is, I think, in our kind of emerging but very much very quickly growing BTC ecosystem, right? I think there's a lot of projects that definitely, one, on the narrative side, definitely makes sense for them to use kind of Bitcoin as the underlying security model. And then I think it's also, if you actually play out what you said earlier, right, on kind of these, if you for a lot of projects, right, if they launch like a sovereign rollup, right, app chain, whatever you want to, L3, whatever you want to call these things, and just overall with the space being, there's more L1s, there's more L2s, there's more app chains. If you play that out to like, kind of a logical conclusion, there's going to be many different chains for different use cases, right? And so that actually means there's going to be a lot of fragmentation of TVL across these different chains, right? And so what that means is that the security for any particular chain using a POS model is actually not that strong, especially in kind of like the next bear market when I think market caps fall, let's say by maybe at least 50%, right, if not longer. And so if you're using your own token in proof of stake as your security model, then during a bear market you actually could be quite vulnerable to attack. And we've kind of seen this already, like in the past bear market, with even, I think it was what was it? Uh, it was like it was like Ethereum Classic or something. It was like, yes, some of these like not so minor chains actually were quite susceptible to attack. Um, and I think that's gonna. So if you play these things out to like play these trends out, right? I think that's gonna be the case even more so, without kind of using shared security.
Actually, Luke, one quick question. Do you, and it's a question I ask myself as well, because us building a BTC LST, the yields need to be there, right? Uh, when do you think we'll see those yields? At what point? Because I mean, will these AVSs, how will they provide yields? Is it just going to be emissions, you think, through inflationary tokens, or do you really think there's going to be like proper yields coming through in the form of like actual real revenue dollars being transferred out in the form of yields to restakers or stakers of Bitcoin?
It's a good question. Um, I think I think in some ways that's like the, I don't know, $1 billion question right now. In this space is like, when does that happen, right? It's something
Yeah.
that EigenLayer is very much working with, and I think uh, um, So I think the way I have to think about it is the. Sorry, give me one sec. I think my son's making a lot of noise, so let me just
Yeah.
stop you for a second.
Go for it.
So yeah, I think on the topic of yield, I kind of think about it this way, right? I think the reality in the space is every project that kind of bootstraps and kicks things off by subsidizing the yield with their own token, right? But I think it's the way to think about yield is I think really looking at yield relative to what your alternatives are, right? And so I think then the ultimate alternative, I think, for everybody in the space is like kind of like the U.S. risk-free rate or like your local markets risk-free rate. And so I think the expectation is the rates are good. There's going to be rate cuts incoming, and I think in some ways then the I think the pressure across all of DeFi is actually will be lowered a little bit in terms of providing these high yields, right? Because I think part of what made DeFi so successful earlier on was kind of being in a effectively zero rate environment, and so just having like decent returns was great, and having like double digit returns was amazing, right? That's kind of like not counting the early days of DeFi summer when you had these crazy high APYs, but then like the question would be like, can you actually get out with your returns? So I think in a long term model, it's more I think it's really like single digit percent yields or like I think low in the teens are probably going to be what's the kind of healthy sustainable yields. Right.
But wouldn't you compare the actual? So you said you see what the alternate sources of yields are, right? And how much they
Yep.
are. In the case of Bitcoin, what would that be? That's like nothing, right? Because
Yep.
there is no on-chain for Bitcoin today. So you say anything is better than nothing. That's
Yeah, I mean, I think the expectation in the Bitcoin ecosystem are certainly different than I think DeFi users in EVM, right? So I think so at least like I would say the rough range of expectations I've seen in Bitcoin is probably like on the range of like let's say like 5 to 15% in that ballpark, right? Like maybe even a tighter range than that, but like I don't want to like give false precision here. Um, because yeah, to your point, like right, the alternative is really nothing, right? And then now that Babylon's here, like there is some kind of like somewhat baseline yield, right? If you kind of believe in Babylon and you trust the tech and the code there, then you would assume that's kind of like now the baseline yield, right? Because it's also like if you look just like Ethereum native staking, right, is like generally what like 3-ish%, right? And so I think the I don't expect it to be like that much different on the Bitcoin side. And then I think Bitcoiners in general, right, are I think value security higher than I think EVM users, right? So I think with Bitcoiners generally, they're willing to give up a bit on yield to just make sure they don't lose their principal stack. Oh, Nikhil, you're on mute.
sorry. I was just apologizing to Aditya because I've kind of taken over from him. But one more question, Luke, actually, because I think your views are quite interesting. So I think if you look at Babylon itself as an example, right? The value prop for Babylon is that so far there was no tech to replicate Bitcoin security onto POS chains, right? You could not get it as a POS chain, but you're starting to see this like change in the environment where people are trying to build their own Bitcoin staking logics. Where we've seen some BTC L2s do this, right? Where you stake your Bitcoin and you have like you earn some yields directly. So, I mean, I have my own views on this, but very curious to hear what you think of this whole situation where chains may even bypass Babylon, right? Why give out a smaller percentage? Why give out a smaller percentage? Because again, if you look at liquid staking protocols on Babylon, right? Let's say as pSTAKE, if we convert all the yields in to BTC and send it back to the staker, it's good for the staker, but not good for the protocol borrowing security from Babylon, right? So if a bunch of LSTs on top of Babylon start doing this, it kind of creates a very perverse, incentive scheme where like you're not incentivized to become a Babylon AVS anymore, right? And uh, would chains, you think, directly go and try to get their own supply side for BTC to secure their chains, use the Babylon tech, for example, and just bypass Babylon altogether? And if that happens, let's say a lot of chains start doing that, how do you think would it impact the LST space plus the BTC restaking space then, if that happens?
Yeah, that's interesting. So I think, so I guess maybe to play it out, right? Like, how would that work, right? So are you saying kind of these chains would just kind of fork Babylon's architecture and then use it themselves?
Yeah.
Um,
Yeah.
hmm.
I mean, not to put you on the spot, right? It's a brainstorming question. So, I mean, you can just think out loud, whatever. I do the same thing.
It's kind of also what happened, obviously not exactly, but with Cosmos SDK, right? Obviously the application was different. Cosmos figured out a great way to launch chains, and then everyone started using it in its own term without actually adding any value to Cosmos directly, and then it became a norm to do that. We have Polygon built on top of it. You have BNB chain built on top of it. The new age era chains, Bera chain, Celestia, Dimension, everyone's built on kind of on top of Cosmos SDK. So in that case, do you see like a Bitcoin SDK wherein people can just launch with a Bitcoin native staking model and enjoy all the functionalities of a chain? Because you have like exactly like what Botanics has done to some extent, right? They have EVM compatibility. They also have their own native Bitcoin staking mechanism. So do you think that is the norm to go, wherein people would go back to the same thing and prioritize sovereignty for their ecosystem over relying on someone else? I think that's also a good way to think of it.
Yeah, I would say, I guess caveat by saying never say never in crypto. But I guess I don't know if that's going to be a very likely outcome, just because I think there is certainly some, I think some measure of first mover advantage here, right? Where it's like, as Babylon TVL gets bigger and bigger, right? I think for a lot of chains, it probably makes sense to just draw from that TVL kind of security budget pool versus trying to kind of bootstrap your own, right? Because I think it's kind of like for Bitcoiners, like why would they choose a particular chain versus just kind of depositing Babylon and then securing like kind of potentially like a basket of chains, right? And I think trying to think through like the game theory side of things, where it's kind of like thinking through like the strong, like if I'm a strong chain, would I do this, or if I'm a weak chain, would I do this, right? I think if I'm a relatively smaller chain or smaller ecosystem, I probably wouldn't do this because I just wouldn't attract that much like Bitcoin deposits for like security collateral, right? Because it's kind of like if I'm a smaller project, like okay, I guess it depends. If I'm a smaller early project or smaller later project, like it's not going to work, right? Because there's not going to be that much interest, right, to deposit BTC there versus into just the kind of Babylon ecosystem, right? Smaller early project, maybe in terms of like the upside potential, right? But then it's also like smaller projects generally you have smaller teams, you have less bandwidth. So like for you to do this, it's like okay, suddenly you have like two distinct products or projects. You have like your restaking copycat protocol, and then your actual protocol that you also have to build, right? So I think it's just going to be from a practical bandwidth perspective, that's not going to be viable. If I'm a bigger chain, a bigger project, would I do this? I'm a bigger project. I guess maybe. I guess this is where it maybe gets a little bit more interesting in that if I have a big enough community, right, this is kind of like the big pivot that I do. And like enough resources, maybe this is the pivot that I do. Um, but I think in that case, there's probably needs to be a bit of technical innovation because otherwise, I think everyone's going to clearly see, okay, you just fork Babylon, and then you didn't really change anything, and then so why not just use Babylon instead of like trying to steal their tech, right? I think you have to kind of have a clear reason that you chose to do that. Um, and like have like I think almost like there needs to be like a clear advantage in like the security or some clear design advantage versus just saying, hey, we could do this just to like not pay fees to Babylon, right?
Yeah,
I think that's a very good
yeah,
point.
it's a good. I think point that you brought, Nikhil. It's a definitely something to think over because, like Luke also said, I think Babylon's tech obviously is forkable, but it is also how they solved this cold start problem in a way, right? That you had a bunch of users on the sideline. Maybe they wanted some yields, and don't want to give away custody of especially an asset like Bitcoin. So that is maybe what leads to a lot of assets flowing there, and maybe also lopsides the demand versus supply because at the end Babylon is like a marketplace. You have BTC lock, BTC economic value at supply, and potentially demand for that security. And what we're seeing is that supply flow in, and then maybe at the later time that demand eventually does catch up. But what I feel might happen is an interesting thing is if an AVS just thinks that they are too big now to still be aligned with Bitcoin through an intermediary, they might just stop being an AVS and then kind of look to forking or becoming their own native staking for Bitcoin. I think that's what I feel might happen.
Mm. Yeah,
Yeah.
I mean, I think one point you brought up that's interesting, which is the like I think from the Bitcoin user's perspective, right? Like Babylon's actually very Bitcoin aligned, and if you're okay, like yeah, I guess ABS is one. If you call it ABS or like a chain, whatever you want to call it, right? In our case, we call it BBS. But if you're kind of like a ABS or BBS project, if you cut out Babylon and then try to absorb native Bitcoin directly, I think then the focus and narrative definitely comes into play, right? Because again, it's like if you're doing something that's good for the Bitcoin ecosystem, then I think there's a potential chance to pull it off. But I think for example, if you're serving more maybe like the EVM side of things, I think that narratively will be very like much harder of a sell to users, right? So like, why would I? It's like why would I not put my Bitcoin to Babylon and put my Bitcoin into you guys, right? Like, it's like what good are you doing for the Bitcoin ecosystem?
Maybe you get a better deal. I don't know. I'm just being the devil's advocate here. Obviously, pSTAKE is building on top of Babylon, so I'm particularly bullish on Babylon and obviously that layer as well because I see the value prop. My only question is like thinking in terms of what could go wrong and being a few steps ahead of it. So I think it's yeah, it definitely may not happen that it's not so easy, right? Because we think the supply side is easy, but it's not. I think it's the hype and the alignment that Babylon has with the Bitcoin community that it's been able to gather the supply, and also the fact that you kind of create like a huge network of distribution, right, through LSTs who are each trying to get Bitcoin that they then end up depositing into Babylon. So Babylon obviously creates hype enough and does so many things right that others are doing BD for it. Uh, and that's not possible if you're just, you don't get those network effects as a chain, as an AVS who's directly trying to compete for BTC staking. So makes sense. I think, yeah, I think that's an interesting view. Yeah.
Yeah. Maybe the real yield was the alignment we made along the way.
There you go.
Yeah.
Yeah,
So
Luke,
So
any
yeah.
takes on from your side? Anything about SatLayer you want to share? I think we're coming up on time, or we are already on time. So I think you
Yeah,
wanna
I mean, I think for us, so I think team is finally kind of catching our breath a little bit after, us coming out of stealth and then announcing both the fundraise and the launch of our deposit app last week. We're extremely grateful for all of our early community members that helped us, fill the cap so quickly and now actually, exceed the cap. I think I would just say, yeah, definitely give us a shout if you'll be at Korea Blockchain Week next week or Token 2049 in Singapore in a couple of weeks from now. We'll have big showings at both places. And then we'll also share there's a few events that we are kind of helping put together. So we'll share that with our community because it's always great to meet folks face to face and put put a face to the PFP.
Yeah, absolutely. Thank you so much, Luke, again for joining. Like like to end these streams. Like this is the second time only we're doing this, but with like a very chill way of ending it rather than a serious note. So what we'll do is just have a quick rapid fire section in a way where we just ask you some questions which are not about Bitcoin or restaking or yields. Things like this. Yeah.
Let's go.
Firstly, what's your favorite city in the world?
Ooh, okay. LA is definitely up there. LA is my favorite city in the US. I would say in Asia, it depends. Shanghai is up there, Tokyo is up there, and then Singapore is also up there, especially since
Luke,
I've
you
been
have to
there now.
choose one. Luke, you have to choose one. All over the board.
Oof. Okay. Uh, uh, choose one. I think I'll still choose LA.
That nice. What we can actually do is, I think last time we left off Mikil from the rapid fire, and he might have some FOMO. So we'll also include. We'll do alternate. Maybe we have a few questions already.
Yeah.
Mikil,
Sure.
what's your favorite cuisine?
Thai food, actually. I love Thai food.
Nice. Luke, if you do play, what are some sports that you enjoy?
So I used to play soccer way back in like middle school, high
You
school.
mean you mean football? You mean football, right?
No,
Yeah,
no, no. Yes, yeah, football. I immediately thought of American football.
Yeah. I think Mikil is a big soccer fan or the football fan. Next question to Mikil: do you think Manchester United are going to win the Premier League this season?
no, because we don't have that man in the background. You see, that's way. We're definitely not gonna win it.
Nice, Luke. What's a book slash podcast or even a TV show recommendation? Something that you've been stuck on lately.
Ah, oh, so my favorite series slash cinematic universe is Gundam. So I highly recommend basically all the Gundam series. The newest one is actually super good. Which from Mercury. It's like it mixes like like Japanese high school anime with Gundam and war crimes, and it's incredible. So highly recommend it.
Nice. Obviously, in the context of SatLayer here or in general, what's the hardest thing about fundraising that's usually not talked about?
Ooh, wow. Okay. Big change. Hardest thing about fundraising. Um, I think the hardest thing about fundraising is the the number of rejections and then the amount of ghosting that happens.
So it's a numbers game, pretty much like dating.
Yeah, it's definitely a numbers game. It's just a sales funnel, man. It's about getting enough people through the funnel and then maximizing your throughput.
That's a good way of thinking about it. Yeah. Lastly, to Mikil, and then we'll call it a day. Do you think Satoshi is alive? If yes, are they he or she still active on something like crypto Twitter?
No, I think if Satoshi was alive and on crypto Twitter, he or she may have killed himself anyway. So no, I think not alive.
Same question for
Satoshi's
you,
on,
Luke.
Satoshi's on his KOL arc, man. No, I'm just kidding. I actually don't know. I'm really curious because there's like the conspiracy around it, being more of a group of people, right? So yeah, I think that's like, that could be like the biggest black swan in crypto history if like
I think
Satoshi
Satoshi
wallet,
was
Bitcoin move.
Satoshi was murdered long ago. He was asked for his private keys, but he or she chose not to give it away, and thus was killed for that.
He's the hero we don't deserve.
Absolutely.
Yeah. So he's the hero we don't deserve, but the KOL we all want. Oh wow.
There you go.
Yeah,
Looking
on
here
that
with
note,
the
I think we'll call
one-liner
it
there.
a day. That's a good way
Yeah.
to end it. Thank you so much, Luke, for taking the time. A pleasure chatting to you, and we look forward to SatLayer's interesting developments. More caps from SatLayer, and I think we also have something cooking from the pSTAKE SatLayer perspective. So that'll also be very interesting to see. I think people are going to hold off to know more about that. But yeah, thank you so much again for joining, Luke, and Mikhil, as always, you too. And we'll catch you in the next one next week. Yep.
Yeah, 100%. Thanks so much for having me, guys. BN and BN.
Yeah. Yes.